in the debate, the national debate in Italy is very much in the implementation of reform, which are precondition to the disbursement of further tranches. We had the upfront payment, but then there are further tranches of the RRF, which is can be delivered only if the reform and the milestone which are indicated in the RRP, or PNRR in Italians, are delivered. Connect Euro facility, again, is possible the one where people are more familiar. This is a fund which is focused on the TNT infrastructure. So again, rail, of course, but as well rail connection, last mile connection to port, both rail and roads. And more, a substantial envelope of this Connect Euro facility is dedicated to the alternative fuel deployments. We have a climate and marking target of 60% under the Connect Euro facility, and this can be achieved as well, other than greening of ports, as well on alternative fuel deployment, including imports. That's why I come to one of the flagship initiatives of the Connect Euro facility, which is the alternative fuel investment facility. This is a blending facility. This is already the third release of this new approach to deliver grants combined with financing from financial institution. The alternative fuel facility can support recharging and refueling infrastructure along roads, ports, airports, of course. There is a limited support for mobile assets, but actually in the mode of transport which can benefit for support for mobile assets is precisely the sector of maritime and inland navigation. So there is this possibility for inland navigation. The co-funding rate depends if those funds come from the so-called general envelope, which Italy can benefit for, or for the higher co-funding rate for the cohesion envelope. The main feature is indeed the possibility, the obligation to combine grant support with repayable support, which need to come from a public financial institution like the European Investment Bank, the EBRD, the Cassa Depositi e Prestiti, of course, but as well from private banks with different term and condition. Overall, the envelope, which is now out, the call has been published on the 16th of September, and all details are available in the website of our agency for execution, SINEA. There are different cutoff dates, and I say the overall envelope is exceeding 1.5 billion. So I think this is an interesting opportunity for the shipping sector, as well to have projects which mature toward the capacity to get private financing, other than simply subsidizing. I refer to the option to get private financing into the sector. Again, the main tool is the InvestEU. The InvestEU, of course, is suite for project promoter and company which has the capacity to generate revenue and to pay back, of course, different form of financing, being loans, guarantee, or equity. There is also the possibility to inject equity through intermediate equity fund, for example. Again, strong focus on sustainability, 60% of the sustainable infrastructure window, which is the largest window focus on climate and environment investment. In the case of transport, I mean, there is no limitation in case of InvestEU of infrastructure only, but InvestEU can support all range of assets, including mobile asset, vessels, and as well company like SME, innovative SME, which are actually supporting both research innovation, but as well deployment of technologies. Share management here. Share management means money or budget managed by member state in cooperation with the Commission. So this is in a planning exercise. We do not have yet an envelope for transport, but just as point of reference, in the previous period, 70 billion were for transport. We hope to have a similar envelope in the coming period. Again, focus on TNT, sustainable mobility, urban mobility. This can include fleet rolling stock. And then, of course, local infrastructure and accessibility. This is an interesting initiative, actually. You see, the budget is limited, is only under 40 million, but actually is used in a quite smart way. This is the European Maritime, Aquaculture and Fishery Fund. This is for supporting SME, innovative SME, venture capital risk, is implemented through a top and financial instrument, actually, which is as to support SME with a venture capital profile. So small SME developing interesting technology. I see in the expo here quite a number of those which might be interested to this instrument. There is a website, Blue Invest. I think SME which are interested in this segment of the transport sector, in some cases, ports might be incubators. We have an interesting case in Netherlands, for example, of ports becoming incubator of venture capital SMEs. In Rotterdam, for example. I think this is an interesting initiative. Finally, I refer to the Innovation Fund. As I say, the Innovation Fund is a bit peculiar. Actually, the resources come from the emission trading system, so it's a monetization of allowances, which depending on the carbon price, were in the past were estimated to be 10 billion, but the carbon price now is ramping up, and now actually the availability is 20 billion, so it's already doubled. The Innovation Fund is actually implemented through call for proposal, so it's grant, quite generous grant in terms of capex, but this is also peculiar. The Innovation Fund can support OPEX, so operational costs of industry which decarbonize generation power, renewable power generation, but as well alternative fuel in transport. I think is an interesting initiative. More recently, the Innovation Fund is also exploring the possibility to top up InvestEU, and that would be actually delivering in the form of loans and financing. This is already happening. We are having an experience with the president of the NER 300, which is the fund which precedes the Innovation Fund, topping up a financial instrument the EIB might be able to present is the future mobility. Again, venture capital risk company, not necessarily SME, but company with a high profile risk, developing interesting technology ready to market, or almost ready to market. Finally, Horizon Europe, research, innovation, deployment is in the largest MFF fund, 100 billion. Large envelope for transport in the past period was in a size of 16 billion for research and in the transport sector. Annual work program and partnership to involve the private industry. And again, focus on green, digital, and innovation. I think I will stop here, so to keep some time in case.
Yep. Thank you very much
from the audience.
I have a question for you, Anton Giulio, concerning the last SAF call, the one that has published. Are the category of projects, studies, including pilots, eligible? Because following the info day last week, it was not that clear to me if studies and pilots are still, part of the package as they were in the past, and they are eventually funded 50%.
We are supporting studies with the envelope for technical assistance. Under the blending facility, we are definitely not supporting pilots anymore because we are moving from, we are building on pilot that has been developed in the past, and we are now moving to deployment. So we want to scale up, and that's why we use blending. And therefore, the nature of a blending, of course, doesn't switch with the idea of also supporting pilots.
Thanks a lot. So we are ready for the first remote speaker. We are still in the European Commission. We move to the DG competition. So we thought it was interesting to have the perspective of the state aid. Of course, DG competition is responsible for state aid, and state aid is a very sensible topic in the maritime sector, as in others, of course. And we thought it was important to have Mrs. Birgit Earl, that is media correspondent of the DG Comp from the European Commission, to give a speech on that. I really ask all the speakers, as Anton Giulio did very well, to stay in 10-12 minutes, because we have even to recover a little bit the time of course that we lost at the very beginning for kicking off this conference this morning. After we would have the European Bank for Reconstruction and Development, the European Investment Bank, and also the Union for the Mediterranean. Are we ready for Birgit? So I thank again Antongiulio to be here. I think your presentation was quite comprehensive. It's not easy to surf navigate all those different funding possibilities. But even I mean there is a support for maritime ports and shipping differentiated in different programs, and I think also that the CEF call launched is one of them. And coming to your child, in a way, the blending facility, it was a scheme launched 4 years ago, the first time. And it was a nice way for spending the money available from the European Commission to support implementation, real implementation, giving a little bit of grant, and also supported by backed by a financial tool, okay, combined. And I remember the discussion we had the very first time, because it was a new scheme, a totally new scheme, and it was working very well. And we have also projects in the port and motorway of the sea sector. We have a very interesting project connect with the port of Barcelona and the port of Civitavecchia, that is called BC Link, that are working under this blending scheme. And so are we ready with Birgit?
Hello,
Julia?
can you hear me? Hello?
Yes, Birgit, we can hear you. So,
okay, I'm sorry I had to join by phone because the Zoom application apparently is not allowed on our corporate computers, and the camera does not seem to be working.
Okay. So you can shorten your speech because we don't have the slide, or we have it. Okay, no, we don't have the slide. So you can go with your speech about the. I anticipated that you are talking about the state aid. So please, the floor is yours. Please stick in 8 to 10 minutes maximum. Okay.
Yes, of course. Thank you, Alexio. I will do that. You can show the slides if you want to, if you can produce them, but I will start anyhow without the slides. So to frame the scope of my presentation, I'm going to talk about how EU member states can support with national funds infrastructure investments in ports in line with the EU state aid rules. So, of course, state aid control is only there where we have economic activities, and that's what frames also the scope of state aid control in ports. So it concerns only investments that concern infrastructure that will be put to an economic use. So this has also been confirmed by the EU courts several times, be it for port or airport infrastructure. And so for port funding, infrastructure funding projects, it is important to determine whether the funding is first within or without the scope of EU state aid rules. And here the most important criterion, there are others, of course, they are listed in Article 107.1 of the TFEU, but the most important criterion is whether there is an economic activity or not. Now, since 2017, we have included provisions on port funding in the General Block Exemption Regulation, in short, the GBER, which is being widely used and which sets out certain clear-cut criteria for granting funding to port infrastructure, to access infrastructure, or to dredging. without prior Commission approval. So if a measure, a national support measure, meets the criteria set out in the GBER articles on port infrastructure funding and the general conditions of the GBER, they can be granted without notification to the Commission. I wanted to show you the criteria a bit later on. They are on my slide, but we will come to that later. Now, so this is for the construction of the infrastructure, but at the port level, there are some particularities because this infrastructure will subsequently be rented out to other users or granted concessions on. And at this stage, one also needs to pay attention whether the state aid used to build the infrastructure is not passed on to a concessionaire or to a user. So a concession should be attributed in an unconditional, transparent and non-discriminatory manner to avoid that state aid is passed on to the concessionaire. And users, so shipping companies, for instance, should have non-discriminatory and open access to the aided infrastructure to avoid that aid is passed on to the users. Also, they should pay fees that are set at market terms. Now, as I said before, the criteria of the GBER, if they are respected, aid can be granted without notification to the Commission. I have here, the criteria can be read in the GBER. It's a maximum of 150 million for 10T core maritime ports with an aid intensity of 60%. If you want a higher aid intensity, then the funding should be lower. It doesn't mean that any project that goes beyond the criteria would not be compatible, but just that it would need to be notified. But I thought that rather than talking about aid intensities and thresholds, which you can read in the GBER anyhow, it would be more interesting to talk a bit about certain types of projects or costs which seem to have raised questions in the past and which seem a bit unclear to aid granting authorities. So in particular, there seems to have been problems with the concept of superstructure, which is actually excluded from GBER funding and which is also not allowed even when in a notified case. So the GBER says that costs linked to non-transport related activities, including industrial production facilities, active in the port, offices or shops, as well as superstructure are not eligible. Now, sometimes a port needs certain surface arrangements or buildings to make it operational for carrying out the transport-related activities. So in these cases, certain surface arrangements or buildings are sort of included in the concept of port infrastructure because they are an extension of the infrastructure that is necessary to make it operational. An example for such a building is a harbor master's office, which is needed to contain the office of the harbor master, staff toilets, technical rooms, etc., provided that that it is exclusively dedicated to the staff of the port for providing transport-related services. So in that case, such a superstructure would be fundable with state aid as an extension to the port infrastructure necessary to make it operational. Now, another concept which was not so clear is access infrastructure. And here in particular, the question of parking space, park houses, garages, parking places in a port. Now, parking is not directly linked to the port's transport-related activities, but in certain circumstances, they can also be eligible costs. And this is, again, if they are needed to make the port operational, but at certain conditions. This is parking places are okay if they are provided without remuneration and if they are accessible to all port users. They are not okay if they are dedicated to one or more operators, or, for example, for storing vehicles that need to be shipped or to clients of a particular ferry operator. They are also not eligible if they are made available against payment, because then it would not be accessory to the transport-related activities anymore, but it would be an economic activity in its own right. Now, more particular for port.
Julia, can you hear me? Can you finish in a couple of minutes because we are late? Thanks.
Yes, sure. I'm almost done.
You can finish, but just in a couple of minutes.
Yes, I'm almost done. More particular for port infrastructure, I wanted to mention the example of breakwaters. Sometimes a breakwater is needed to extend the port's activity for meeting growing demand, and it benefits then only or mostly the port community. In that case, the funding of the breakwater would constitute state aid. But if, for instance, breakwaters are needed to protect society at large, for instance, from rising waters due to climate change or from very stormy tides, then this would be considered to be a public remedy task of the state and would not constitute state aid and could be funded outside the scope of state aid control. Now, another issue which joins a bit some issues already raised by other speakers is landside electricity supply to vessels. We have had recently several projects from ports reflecting on building such infrastructure which would furnish alternative fuels to ports during their stay, to vessels, during their stay in the port, and which would greatly reduce emissions emitted by vessels in the port, as it would allow to switch off onboard generators. Now, the question was, can such infrastructure be considered to constitute port infrastructure, EA? Is it a transport-related service? Now, we've gone back to the definition we have in the TBER on port infrastructure, which includes also fuel infrastructures, which it defines as an infrastructure allowing a port to supply vessels with energy sources. So in that context, we are considering that the supply of energy to ships, even while docking, can be considered as a transport-related activity, because ships are docking in ports, of course, for a purpose. They dock in a port because they go there to transport goods or to transport passengers. So this is also included in transport-related activities, and if it meets all the conditions of the GBER, such landside electricity supply could be exempted under the GBER rules for ports. So in principle, I wanted to touch a few words upon a new instrument that the Commission has just recently adopted, which will also facilitate the granting of aid to ports, and which is the 2021 GBER extension to the Invest EU fund. Well, the GBER extension covers other issues as well, but for ports, what is important is this instrument of the Invest EU fund. This is a single set of rules for all financial instruments and budgetary guarantees in the next EU budget. And as it incorporates key stated principles already, such as the common interest objective, the market failure or socio-economic cohesion objectives, and interventions limited to the minimum necessary to reach these objectives, it has been necessary only to pose very limited additional state aid requirements in the GBER. So for national funds that are combined with Invest EU, there is this new GBER Article 56E.6, which poses, as I said, very limited compatibility criteria. And if they are respected, then national state aid can be seamlessly combined with Invest EU funding also for ports now. This regulation has just been adopted on the 23rd of July and is in force now for ports. So this is an additional instrument now available.
Thank you very much.
Thank you very much.
Thank you very much, Birgit. Thank you very much for your speech, even with some technical issues. And we move now to for the next speaker, that is Ms. Julia Kaczynska, that from the European Bank for Reconstruction and Development, to see which are the funding possibilities or the funding support that the European Bank for Reconstruction and Development managed in the past, with some examples on the port facilities. Julia, are you there?
Here. Thank you. Good morning, good afternoon, everyone.
Morning.
And thank you for having me here today. So I'm just trying to share my presentation. Just give me a second.
Yes, we see you and we hear you, so you can go with your presentation. And please try to stay in 10 minutes because we are a little bit late. Thanks a lot,
Sure.
Julia.
I'll try to be very brief and concise. So I would like to start with saying, what EBRD is and where we invest, because this is, I think, quite important. So we are an IFI established in '91 after the collapse of the Soviet Union. We're owned by 69 countries as well as EU and EAB. So you can see, majority of our shareholder base is essentially EU countries and EU institutions. And that drives a lot of our policies and what we finance and how we approach financing of maritime transport, among other sectors. On this slide, I'd like to show you where we invest. So you can see, some of the countries we invest, some of the markets of operations we invest in are in the EU, some are outside of the EU, but obviously, TNT networks, they do not end in the EU, they often extend to the neighboring countries, and they are still key for facilitating intermodal transportation. So improvement in infrastructure of the sort of neighboring countries is actually also very important. And while within the EU there is a sort of bigger availability of various instruments to finance that infrastructure, EBRD actually fills the gap to finance that infrastructure in less developed countries. Yet that are neighboring to the EU. So we operate in 39 countries, and when we finance, we operate based on the sound banking principles. It means that we need to have a project that is bankable and commercially viable to invest in. Since our inception, our infrastructure group invested nearly 45 billion euros across the various sectors in infrastructure. We contribute extensively to UN Sustainable Development Goals, and sustainability angle is very much of importance to us. From January 2023, all our projects will be aligned with Paris Agreement. In terms of the transport sector, we invested over 17 billion in the form of equity, debt, and anything in between. We often facilitate private capital, so that we mobilize private capital that into the project that is not willing to come on its own, but is comfortable enough to come together with the EBRD to finance the projects. We also leverage EU grants in various sectors, including transport. You can see, over 40% of our portfolio here is actually invested in Southeastern Mediterranean and Southeastern Europe. Last year, we invested nearly 1 billion in transport projects alone. We do invest across the sort of supply chain in transportation. We have a big focus on intermodal transportation, and obviously maritime is one of the important sectors. For maritime sector, when we invest, we try to achieve at least one of the objectives for the sector we set out as part of our transport strategy. So as I mentioned before, intermodality is very important for us. So that sort of connected networks that we're looking at improving infrastructure along the transportation chain. We strive to increase private sector participation. A lot of the port authorities are still owned by the state, so we encourage more private sector participation in that, so either via concessions or PPPs or any other form. So for us, it is also really important to have environmental and socially responsible transport, which reflects environmental and social needs. And we also promote and support low carbon and innovative solutions in maritime transportation. Now, with innovation in maritime, it may not be, it doesn't have to be something very, very new in terms of financing or the project. I think what we often overlook is that there are a lot of financing innovative solutions that we actually can be borrowed from other sectors and deployed in the maritime. Interestingly enough, there is a sort of steady flow of infrastructure projects in maritime, but I think where everyone struggles is actually decarbonizing the shipping itself, right? It's an enormous task, and we're looking at this as well, and we're sort of brainstorming with the industry's stakeholders how we can move to decarbonize shipping, and then sort of stimulate the infrastructure development at the ports and terminals. So as I mentioned, we also have a sustainability mandate for maritime industry. Now, how do mainstream green financing? This is a very difficult task. So at the level of the sort of projects and investments, we do provide direct financing, be it equity or debt, but as I mentioned, we do look or pay particular attention at the fact that all our financing shall be provided on a commercial basis. We do provide financing, indirect financing via the local banks, where we structure financing programs via the local banks, which could then on-lend to particular sectors, including maritime and energy efficiency. We manage investment grants, including new investment grants that would support climate technology transfer in our markets of operations. We also sort of partner with providers of concessional finance to increase affordability of the projects we finance. Now, financing is not everything, right? There are two other areas where we as IFI are instrumental in delivering these projects. So this is policy dialogue and technical assistance. So very often role of IFIs is associated with these two elements as well. So in policy dialogue, it's really working with governments and regulators to address sustainability, environmental market gaps, to strengthen institutional and regulatory frameworks that would facilitate decarbonization of the industry. In terms of technical assistance, it can sort of take different forms and shapes, depends on the project we do. But let's say if we're talking about, working on port expansion of the port or the terminals with the Port Authority, it can take a form of helping them with feasibility studies that then can come into fruition of actually the project and securing the financing. So these are just the examples, what we finance. As I mentioned, the port generally in our markets of operations, the ports and terminals, they are commercially viable enough to be able to secure the financing by themselves, with us sort of coming in and potentially crowding in commercial banks. Where there is an issue is actually financing shipping and vessels. Here it is quite difficult to sort of come up with a bankable model to finance, especially if we are moving, when we're moving towards sort of net carbon, net zero emission world. It is important to find a solution how we can finance zero emission vessels, and this is still under development, and we're still sort of brainstorming with other stakeholders in the industry how that can come into fruition. So for that, we established various corporations with various international organizations, including MDBs, IFIs. I think what's worth mentioning is that recently we established FinSmart roundtable discussion together with the IMO and the World Bank. And this is the platform that gathers together all the stakeholders in maritime industry to discuss decarbonization of shipping. So our last session was around 2 weeks ago, where we discussed the key findings of our work. And those key findings were focused on shipping separately and on infrastructure separately. And what we found is that indeed, the huge problem is sort of to resolve the chicken and egg situation of decarbonization of shipping, because there's still lack of consensus towards which technology the world will be going. This prevents the ports make necessary investments into the infrastructure. But here, what we sort of concluded is actually the risk apportionment across or along the value chain in maritime transportation is very key to resolving this chicken and egg situation. So what I think when I'm talking about risk apportionment between the key stakeholders, and what I mean here is essentially to take some of the risks that are currently with shipping companies and see how we can share these risks with other participants across the value chain in the shipping. So for example, we have cargo holders, we have large companies, blue chip companies that are using shipping to transport their goods. Surely some of the risks they can be taken by them, for example, via providing long-term charter contracts for shipping companies. So with these long-term charter contracts, shipping companies can go and secure alternative fuels for the long term and perhaps even fix the price. They can take that contract and go to the ports and actually say, we have this contract with the blue chip company for 10, 15 years. We would need bunkering infrastructure on our routes. Can you, working with us, can we set it up? And then it provides a lot of predictability for the industry to decarbonize, because what this will create is essentially a stable cash flow for decarbonization project that then becomes very sustainable and very stable and very predictable.
Julia, sorry to interrupt you. I mean, 2 minutes more, because we are late. Thanks a lot.
Yes.
2 minutes,
so again, here, some examples of what we've done in the past of the investment. So as you can see, a lot of these investments are the infrastructure. A lot of the ports and port authorities are addressing sort of low-hanging fruits, i.e. electrifying the operations, installing LED lighting, and so on. But for us, these are also sort of one-off projects. Ourselves, we're also struggling to scale up this project. So I think, again, sort of reiterating the message, I think these commercial enablers that I was talking about and risk sharing with other stakeholders of the industry will be key to actually scale up and create a mass product that financing institutions will be able to take up and private investors will be able to finance. So that, I think, concludes my presentation. If there are any questions, please post them in chat. Thank you.
Thank you very much, Julia. We move now to the European Bank for European Investment Bank, EIB, and we have two speakers, Santiago Larregola and Rino José. We ask both to combine the speech in 10-12 minutes, please, because we are really late. And but we are pleased, of course, to have two speakers, the energy infrastructure and public sector manager and also the port specialist. So Santiago and José, are you there?
Yes, we're here. Do you hear me? And above all, do you see the presentation? Can you?
Okay.
Okay,
we can hear you. So you have 12 minutes. Thanks a lot. You can go on. Thanks a lot.
Yeah, don't worry. We will be quite fast. We'll go quite fast. So thank you. Good morning to everyone. Thank you for the invitation. Thank you to the organizers. Naturally, we will be very brief because most of the topics about who we are most or less the same of our colleague Julia from the EMBRD. So just to say a brief thing is that the EIB is also a public bank. The shareholders are the member states in the UE and the European Union, and we finance most of our projects within the European Union. For example, in Italy, in the last years, we've been financing around 10 billion per year. So our headquarters are in Luxembourg, but some of us, like me, for example, are based in external offices. I'm currently based in the Rome office, but at the end of the day, we will have to go back to Luxembourg. This slide explains you more or less that we are more flexible of what people think. I mean, we try to adapt ourselves to the project and to the financing. So we move along with the client to try to find the financing more suitable for them. For example, we are talking not also about lending, but also, for example, from guarantees, as our colleague from the European Union was mentioning before. These guarantees, for example, in the last years was the EFSI, and now we're moving towards the InvestEU guarantee that will be set up in the following months or in the following years. What is true is, for example, the EIB have to conduct a due diligence for each project. This due diligence is not only financial, but it's also technical. So with this due diligence, we try to find those projects and those investments that are eligible for us. Eligible for us in terms of investments, but also in terms of the green investments. About this eligibility, my colleague Jose Reino will speak now, so I leave the floor to him, and he will explain more or less in depth what we try and what we can finance.
Sure. Good morning to all. Thank you very much for the invitation. So in terms of the eligibility criteria, as the bank is also a public institution of the European Union, there is consequently an economic and a development interest on the priorities of the bank activities, of course. I mean, one of the preliminary screening criteria that we use is to have the projects included or aligned with the TEN-T networks, both the core and the comprehensive networks. There is also, of course, a priority given to the projects located in convergence regions. Basically, this is to say that projects that are not in TEN-T networks or in convergence regions will face very difficulties in finding a financing with the IB. I mean, the main objective of this is, of course, to have a rational and a structured support across all the European countries to sustainable transport. We all understand that maritime transport is essential to the establishment of a sustainable transport network. Not only ports are crucial nodes on the network that facilitates interoperability and intermodality between transport modes, but at the end, the maritime transport is also acknowledged to have the lowest CO2 emission levels per unit of cargo transported. And therefore, they must be included as a very relevant transport mode and a very relevant alternative to land transport within the European space. But how does this translate into real physical projects? Can you show the next slide, please, Santiago? So in terms of the real projects, the bank usually supports all types of port-related projects and investments for both the public authorities, but also for private and terminal operators. I mean, all the basic maritime infrastructure are included, so the breakwaters, the quays, land reclamation, dredging, I mean, all the related big maritime investments are included in what we can finance. Of course, that the trends recently have been moving a little bit from these big port investments, these new greenfield port developments, and it's moving now essentially. Sorry, can you put on the next slide, Santiago?
Yeah, sure.
And it's moving now essentially to other different projects that include digitization, operations efficiency, include port reception facilities, include cold ironing, include electrification of cranes and other handling equipment. And I mean, these are all projects that are understood as part of the greening of the port sector and in transforming the port sector and including it in a sustainable transport network across Europe. The next slide, please, Santiago. I mean, just also some small notes. Can you move to the next slide, Santiago?
Yeah, this one.
One above, that one. Critically, no, above, sorry. Yes, that one. So, I mean, there is also a big priority for the bank to invest in inland waterways as an alternative to the other land transport modes. In terms of financing vessels, we are currently reviewing our transport lending policy, so there might be some news at the end of the year, and we will of course need to align with the taxonomy of that is also being released now and studied together with the European Commission. Of course, that we will impose criteria in terms of the efficiency of the vessels and on the type of fuels of the vessels. One last note, very important on this slide in terms of the climate adaptation and resilience project. I mean, we all understand that ports are, by its location and nature, quite prone and sensitive to extreme weather events derived from climate change. And therefore, we also see now recently climate adaptation and resilience projects being given priority not only by the port authorities but by other stakeholders, and they have also been included recently on the BECS assessment. I mean, these include breakwaters reinforcements to avoid overtopping, include coastal protection, including sand refills, including regularization of river mouths. So, I mean, all these projects are also given particular attention nowadays at the bank. My last slide, can you pass? Yes, please. So, I mean, just to conclude my part, I mean, I also like to touch a little bit on the critical issues that we at the bank, the bank's projects team face during appraisal, that are these that are on these bullet points. I mean, on one hand, we want to see a rational use of the resources, of the financial and economic resources of the bank and of the port authorities and of the clients, and therefore we run our own internal economic models to make sure that we comply with certain thresholds for the economic and the financial returns. There is also one thing very important. We need to understand if the commercial strategy of the stakeholders, both the port authorities and the terminal operators, are aligned with the interland connections. I mean, if there will not be bottlenecks in the accesses to the port, both the railway and the road accesses. We need to understand that these investments are also supported in long-term strategies, both at the port level with the master plans, but also at national and regional studies. And finally, I mean, the environmental and the public procurement matters are also very things that we look into with some detail. I mean, there is of course a social responsibility of all stakeholders, not especially public authorities, but not only, to fully comply with environmental requirements and lead by example on all these matters. I mean, it's important not just try to find gaps or shortcuts on these matters. I mean, it's important that we all understand that sometimes these environmental procedures are cumbersome and time-consuming, but they are also critical to attain a sustainability of the transport network, and it's something that we are also very, very sensitive. And that's also because we are a public bank. Our stakeholders are the countries of the European Union, and they asked us to also to be concerned and to take some particular attention to these matters. And now I leave the floor also again to Santiago to complete the presentation. Thank you very much.
Just to finish with, because it's the last slide, a little hint about the EIB in the Italian port sector in the last years. We've been financing now for the last 7-8 years ports in Italy. The climate action, it's becoming more and more important each day. The EIB loans usually account for 50% of the total investment costs, but sometimes we can reach up to 75% if these projects are in the TEN-T corridor, in the TEN-T corridor. We do long-term financing, so we can finance up to 20-25 years. And in the last years, for example, we've been financing the ports of Trieste, Genoa, Savona, Livorno, La Spezia, Civitavecchia, Ravenna, so more or less almost all the projects in Italy. By the end of 2020, we had financed 640 million, and we hope, and I cross my fingers, to reach 1 billion by the end of this year. So I think that's all. Thank you very much. We try to be very, very fast and very brief. So, but anything you need, if you need anything else, we're here to answer, or you can contact us.
Thanks a lot, Santiago and Rino. It was a very nice and broad, comprehensive view of what the European Investment Bank could do for the sector. So I think we are covering different ways of supporting the maritime sector. So thanks for that. So we are well recovering time. Just a technical, let's say, logistic information. We have a session now in the next couple of minutes, in the next 10 minutes, about the zero emission shipping that is here. If you want to follow the one on digitalization in supply chain, in safety and security, you have to move to the vessel, to the Luigi Rizzo vessel of the Italian Navy that is outside the pavilion number 10. So pavilion 10, if you want to be 12 o'clock at the supply chain digitalization and safety and security in transport industry session. We move to the last speaker. We have a withdrawal of Mr. Mohamed Al Sakran, that he is here, but he was engaged by his government in a meeting for the Jordan transport development. So he is around, and maybe he's joining us at the very last moment. So I give the floor to Alessandra Sensi, the head of sector for environment and blue economy, for the perspective of how the Union for the Mediterranean is supporting the port and maritime industry. Alessandra, the floor is yours.
Thank you very much, Alexio, and thank you very much all colleagues for this invitation today. As you just said, Mr. Mohamed Al Sakran, who is actually our UFM co-president, UFM Jordan co-president for transport and blue economy, cannot be at this precise moment with us, but of course he's around, and we will be really pleased to meet and cross all of you in person just to discuss issues further. However, let me give the possibility to briefly say where the UFM stands. Thank you very much actually for the invitation to this specific panel. As you know, the UFM is an intergovernmental organization made up of 42 countries, all the European countries plus, let's say, all the Mediterranean countries intended in a larger sense, meaning including also Jordan, as I just mentioned, who is, by the way, also our co-president, and Mauritania. The UFM brings together, in a certain way, all these countries around, let's say, a common agenda. So the priorities that the 42 countries agree on are the ones that within the transport sector, within environment, blue economy, are in a certain way carried on. I'd like actually to mention three important, let's say, milestones of this year. Let me recall that we work at three different, let's say, levels. Ministerial meeting, working groups, and projects. I mentioned actually the Jordanian co-chair, but let me also mention that representing the European countries, of course, we have the EU. So we have two co-presidency, North and South, one permanent at European level, and the other one on a rotating basis. And since some years, we have with us actually Jordan on behalf of the southern countries. So I was mentioning that we had three important events, a sort of a triplet of ministerial gatherings, which do move along the lines of what all the previous speakers said. The first one was actually on the 2nd of February of this year, where the ministers actually of the 42 countries approved the ministerial declaration. Then we had on the 15th of June another important ministerial on energy. And we are about actually to approach another very relevant ministerial just, next Monday on the 4th of October in Cairo on environment and climate change. So, of course, the common thread of these three ministerial is very clear. It's all about, of course, this green transition, this digital transition, this energy, let's say, transition that the Euro-Mediterranean region as one is indeed approaching, though the southern Mediterranean countries do have actually a quite active role since already some years. So what is actually in the common agenda? As I said, we do not touch on all the issues, but we do touch on those issues that the 42 countries want to handle, want to manage, want to cooperate on. So we are talking, as it was mentioned by basically all the actors before, of course, green shipping and green ports. There is, of course, a strong accent at the moment on retrofitting, adaptation of commercial vessels, as well as on smart, green, and dry ports. So the digitalization aspect is absolutely important. And let me also, let's say, link with all the aspects related to innovation and research that were mentioned, let's say, on the way. Of course, for the non-EU countries, what is also particularly important is also the transfer of technology. And just to mention one, I mean, another of the many other points that were mentioned, there is, let's say, a common understanding at the moment to take accelerated steps towards, let's say, reduction of the sulfur oxide emission for the whole Mediterranean area. Now, why are we here in this panel? Because we are not a donor in the classical sense, as you know, and as also previously discussed.
We cannot hear you anymore. Sorry, Alessandra, there was something broken now. We cannot hear you anymore.
Can you? Now?
Now very low.
Very low.
No, no. Okay, now.
Yes, now? Yeah.
Okay.
So what I wanted actually to specify is that the UFM is not a donor per se, but what we do, actually we do maintain a constant dialogue. We are a facilitator in a certain way for countries dialogue, for creating an enabling environment, but also for helping in channeling, let's say, the funding to the different countries. So how do we do it? So I was referring actually to the working groups. We do have working groups on different topics. Transport and blue economy are the one actually that are in focus at the moment on a very regular basis. And we are in constant contact with the IFIs. Just for example, we have actually the EIB sitting in our office, but we have also very close contacts with the EBRD, just to refer to the colleagues and to the speakers that just preceded me, to define actually the next packages of investments with the Southern Med countries. At the moment also, let's say in the light of the very recent communication by the European Commission, which is the one related to the renewed partnership with Southern Med, there is a big investment package available that we are trying actually to discuss a shape around the country's needs. More, let's say, autonomously, but of course, I mean, always within this very important frame. What we also do is we can directly support studies and technical assistance that we do sort of define as seed money, if you want to call it this way. I mean, even to define pre-feasibility or feasibility study that in a certain way are needed for investments themselves. So this is actually to give you an idea of the whole package. We could speak for many more hours, but of course, I mean, I remain available for any follow-up, question, contact myself, as well as, of course, the co-president, Mohamed Al-Sakran, but of course also the colleagues of the European Commission, which are also the EU co-presidency, for any follow-up on the various points touched. Thank you very much.
Thanks a lot, Alessandra, also to stick with the time. We have almost recovered the initial delay, so we are ready to close this session on funding. Thanks a lot, and to move to the next one. We go now towards some concrete stuff on how to go towards zero emission shipping, and we have to chair this session Mr. Panagiotis Zakariadakis, that is the managing director of Ocean Finances, is also a top-level expert in the field. We have also two experts and speakers in presence, Jacos Pavelek and Christopher Donovan, that I ask them to join the podium and the stage. And I leave the floor, please come, I leave the floor to them. And we have also some others remotely connected. And for the ones, again, they want to join the supply chain digitalization, is in the vessel outside Pavilion 10. Thanks a lot right now, and let's move to the zero emission shipping. Panayotis, thanks for joining, and the floor is yours.
Thank you, Alexio. So I don't know if you want a break. I guess you won't, but let's have a 2 minutes. Not break, but silence.
Panagiotis, can you hear me?
Yes.
Panagiotis, we can't hear you online. Simon, can you hear me?
I can hear you.
Right, so we...
Yes, we can all hear each other, but it seems like Panagiotis can hear us.
I wonder what he's saying about us.
I guess the question is which one, whether we or him are broadcasting on YouTube right now.
Yeah.
Simon, I think because you're unmuted, you're actually, I've just gone to the live YouTube and you're on that at the moment. I think if we all mute, then maybe that will go back to the plenary.
zero emission, no matter what the source of electricity is. You combine all those three together, then we see that the fuel Euro Maritime is at risk of not getting as big as impact as maybe the Commission is hoping for. But okay, just to clarify, so I'm not against OPS by no means. I see this as a perfectly good solution for reduction of air pollution in ports. And it should by any means be supported and by the European Commission and by the regulation, but it should not be supported in a way that allows for greenwashing, right? In this sense, we feel that there is still some. We have to speed up. Yeah, this last sentence. So on the whole, I think the Fuel EU Maritime regulation and the other regulations in the Fit for 55 are very good and they go in the right direction, but still there is some work to be done. Thank you very much.
Thank you very much. Thank you very much for the presentation. Very interesting indeed. Okay, the next speaker is Gavin Allwright, the Secretary General for the National Woodship Association. He has contributed to several studies at an IMO level, OECD and EU. And he will be joining us remotely. I hope he's ready to join.
Yes, I am, Panos. Can you hear me?
Yes, Gavin.
Right.
Please proceed, but please keep the 10 minutes limit. Thank you.
Absolutely. Can you see my slideshow here?
Yes.
Are you able to see that in the session there? Ah, there we go. It's just coming online. I can see that. Okay. So I will try to keep this within my time slot for sure. So my name's Gavin Allwright. I'm the Secretary General of the International Woodship Association. And first of all, I'll just kick this off with a welcome to the decade of wind propulsion. Now, these decades of can be sometimes seen just as marketing ploys. Actually, we're very focused on the first word underneath that, which is on delivery. There's been a lot of talk around wind propulsion over the last few years. This is the decade where we actually deliver on that promise. And hopefully the next few minutes, I'll be able to show you exactly what I mean. Just a very quick word on the association itself. This is an international network. We're active in about 30 different countries with over 130 active members around the world. As you can see, we're quite Europe-centric because there's been a lot of R&D working there. Asia is now growing quite significantly with installations and applications going forward, and we're developing wind propulsion hubs or centers of excellence around the world too. So what are we actually talking about when we talk about direct wind propulsion? Well, we're talking about the direct application of wind power. So the use, the delivery of a pure zero emissions energy source straight directly to the point of use. So it doesn't require any infrastructure on land. It doesn't require production, refining, storage, transportation, etc. So we're actually using the power of the wind as efficiently as possible. Now, as a retrofit option, that will likely deliver between 5 to 20% of the propulsive energy required on a vessel, optimized up to 30%. And we're already seeing at 5 to 20% the delivery of that across a number of different vessels. Of course, if you take that to a new build situation, then we can really optimize the design of the vessels. And of course, with operational changes, which I'll come back to in a moment, 50% plus energy provision is certainly possible and certainly doable and has been done. So just very quickly, I'll touch on the 7 sections of technology. There are, of course, the standard soft sail or dyno rigs, which most people think of when they think of a wind ship. We also have hard or rigid sails, often seen in the racing fraternity, coming into commercialization now. We have kites, which a lot of people would have seen maybe 10 years ago, the first iteration of those. These are coming back, fully automated, etc. And one of the big ones that's coming into the market now are the Flettner rotors or rotor sails. And these are rotating cylinders. They look like energy energy generators or turbines. Actually, it's the other way around. They are operated with a small electric motor. As the wind hits those cylinders spinning, it creates a high pressure and a low pressure segment on each side of the cylinder, and that generates thrust. And then there are a number of other sections as well, suction wings, which suck in the boundary layer around the wind wing, and also hull form, which is where the hull of the vessel is actually designed to create lift and thrust itself, and of course wind turbine. Now, we're talking about zero emissions and the pathways to zero emissions, and we've adopted this hybrid wave approach. Now, really, if we're going to be hitting this 1.5 degree target, the carbon budget available to shipping is about 8 to 9 years of the use of carbon today. And pretty much all ships designed and built today will be operating in a net zero emissions world at the end of their service life, in that 2040, 2050. That's in front of IMO 2050, but I think all of the indicators are we're going to have to tighten this much, much stronger to stay within that 1.5 degree. Now, what we're focusing on here is much more of an energy-centric approach rather than a purely fuel-centric approach. So if we factor in wind propulsion, say at a conservative level of 20% across the fleet, remember this is without operational changes, then we factor in operational optimization. So for example, reducing speed actually increases the percentage that wind propulsion can deliver, weather routing, etc., etc. Another 20% would be reduced from that energy provision or increased from wind, plus the vessel optimization. So these are the ship efficiency measures, air lubrication, etc., delivering another 20% or reducing by 20% the energy requirement. With this 60% plus, we're then looking at eco-fuel provision that could be 40% or less of the energy requirement for the fleet. And that becomes a much easier nut to crack and possibly facilitates a much quicker rollout of the system that we're looking at possibly going to take a decade or two to roll out. The great thing about wind propulsion, obviously, it's compatible with all fuels. So now, where are we today? Well, we have 15 ocean-going vessels in operation with wind assist systems as of Q2 this year. That should increase to around 20, covering most of the shipping segment. As you'll notice, the one that's obviously missing here is the container segment. Obviously, with wind propulsion, with many systems, you need a significant amount of deck space. However, off-deck systems such as kites are certainly retrofittable onto containers, and we should be seeing those coming into the market again. From December this year will be the first installation, and then coming through into 2022. Obviously, with new container ship designs, then there's going to be a little bit of a trade-off here. Losing a few percentage of your deck space, but being able to deliver a significant amount of fuel savings. That is a discussion and obviously a commercial trade-off that needs to be considered. And I'm not going to spend too much time on this, but this is the small vessel and traditional sail developments are also moving ahead. Now, moving on, I have about 2 more slides here. Market forecasts. Well, I can talk about the market, and of course, the immediate pipeline is looking like it will double next year or into Q1 2023. But using third-party forecasts, the EU has forecast around up to 10,000 installations by 2030. And indeed, this forecast was made prior to the IMO initial strategy, so it didn't have a lot of the drivers factored in there. We think this is conservative, but still 10 to 15% of the fleet though. By the 2050s, the UK Maritime Plan has forecast market penetration up to 45% for wind propulsion. Again, we feel that's conservative, but a significant number nonetheless. This is my final major slide, which is a thought piece that I wrote a few months back, looking at if we did have a 20% rollout, so a rollout across the fleet of wind propulsion this decade, delivering 20% of the energy requirement, and that would include operational changes as well. Actually, the savings by 2050 would cover IMO 2050 targets of 50% decarbonisation, and likely release the funds, if you like, from the savings to take us a significant way towards full decarbonisation. So wind would pay for itself, but also deliver free energy to the industry, enough that we could be paying for the infrastructure required for those eco-fuels to come online. And that's without those being reduced. And this is my final slide. We like to call this a win-win-win situation. Wind is not quite mainstream yet, but we're moving away from the periphery. And all of the companies listed here are all engaging with wind at different levels. Some of them are installing, some of them are developing systems, others are testing and validating those, others are researching and evaluating wind presently. So we can see, even though the technology is not yet mainstream, we can see that a huge number of mainstream players are actually engaging in the sector. And that bodes well, of course, for the installations coming in the next couple of years. So hopefully I've stayed within my time frame, and I'll hand over to the other expert speakers. Thank you.
Thank you very much, Gavin, and thank you very much for keeping the time. A really interesting presentation, and it's really a trend now. We see more and more projects with these wind devices. And what's more important is that wind is available, it's free, and we don't need any kind of infrastructure for these things. So let's move to Jesse Fanstock, the project director of the Global Maritime Forum. He will be joining us remotely from Stockholm, Sweden. I don't know, Jesse, do you hear us?
Yes, I hear you. Thanks very much.
Okay. Please try to keep the time. Thank you very much.
Should be no problem. And really great to follow the previous presentations. I wish I could have heard the hydrogen presentation, but both had really a lot of really interesting detail, and I found them very encouraging. My name is Jesse Fanstock. I work for the Global Maritime Forum. We are a foundation that works to improve the impact of the maritime sector on the planet, on people's lives, and on the economy. A lot of the work we do is with decarbonization, particularly with the Getting to Zero Coalition, a group of companies we've convened to look at how we can make zero emission shipping commercially available by 2030. To do that, we brought together companies across the value chain, so not just shipping companies who were originally our core members, but also energy providers, potential providers of future fuels, ports, financiers, think tanks. So a broad group of stakeholders to really look at this question together, looking at it thematically from perspective of policy, from perspectives of technology, from the more commercial side. We have a number of working groups, and we do both research and action, and have started even putting together smaller project consortia to encourage first movers. Given the theme of this discussion, I wanted to present a little bit of our work related to the transition to zero emission shipping, mainly focused on the fuel pathways. The transition is about a lot more than fuel pathways, but and I think that's an important message. But it's also about policy. It's also about commercial aspects. It's about social acceptance and many other things. But obviously, there's a lot of interest in the future fuels for shipping. I maybe preface my presentation by saying that we are very much focused on deep sea shipping, large scale cargo shipping. So not everything I say will apply to every segment of the industry, of course. Maybe to start at the beginning. Where is shipping in its transition? Well, we see a few curves here of the ones on this graph. The black and the purple one are two examples of emissions reduction curves that could deliver a transition that's within a carbon budget that's aligned with 1.5 degree temperature rise for the sector. Now, we're not saying that this is a commitment the shipping industry has made or is going to make, but these are two different trajectories. Unfortunately, the current policies in place and the likely developments over the coming 10 years make the dark green or black line, I'm not sure exactly what color it is there, much harder to achieve. And so something in the shape of the purple line is becoming more and more likely. Unless we can deliver a lot of efficiency, for example, through a lot of wind assistance in the next 10 years, it seems unlikely that we will be able to achieve this kind of outcome without a very rapid and comprehensive deployment of zero emission shipping in the 2030s and 2040s. So given that the success in delivering these scalable zero emission fuels is going to be absolutely critical. And that's what I want to talk about now. So scalable zero emission fuel, what do we mean there? Well, zero emission, by that we mean that fuels in the long run will have to be net zero emissions on a well-to-wake basis. Basically, no fuel can deliver this now. Even the most promising fuels have some supply chain emissions associated with them. But some fuels do have the potential to get very close to zero on a life cycle basis. Some of them contain no carbon atoms, which is an advantage. Hydrogen and ammonia would fall into that category, but others have carbon atoms that can be produced on a net zero basis, either as advanced biofuels or integrated in a methanol product that uses a bio-based input. Of course, then there's also the question of scalability. The transition that we're looking at to meet these 1.5 degree goal, or really anything like it, will require a massive scaling up of fuel production. At the peak of the transition here, the period between 2041 and 2046 on this graph, we estimate that about 30 full-scale fuel production plants will need to be added globally every year during that period. So that's a huge investment, and it's going to put a lot of pressure on inputs into zero-emission fuels. Of the two primary alternatives, biomass-based inputs or renewable electricity, I think it's very clear that renewable electricity is easier to scale up fast. That's not to say it's easy, it's easier. Renewable electricity can also be, scaling up the production is also going to be a big challenge, but it doesn't have necessarily the hard limitations on it that biomass inputs do. So I think it's important to notice that, or to note that bio-based fuels, fuels based from biomass feedstocks, or from the capture of CO2 emissions from the combustion of those feedstocks, which is the current Maersk approach, are likely going to be a transition solution. In the long run, these fuels are going to need to be electricity derived primarily in order to scale up. So that's what we mean by scalable zero emission fuel. What is the picture like on the seaside? How will the rollout look in terms of the vessels? Well, the modeling put together by our partners at UMass suggests that assuming the transition or the implementation of zero emission vessels starts around 2026, that we could get about halfway there in about 15 years and complete the transition around 2050. One of the interesting things, I'd ask you to disregard the lines, which are a little bit lumpy here and need to be smooth. But if you look at the area part of the graph, about an equal number of ships are retrofitted as are new built in this scenario, which I think is a surprising finding. Now, there are ways to approach this that don't involve such heavy retrofitting. For example, if the ships built over the next 10 years are designed for shorter lifespans, they could possibly be replaced instead of retrofitted during this period. But we see a significant need for retrofitting over the life of the transition. In terms of discussion about which fuel pathway, well, this has attracted a lot of attention and there's a fair amount of uncertainty. There was a very interesting graph that I would have liked to have heard the presentation around on hydrogen and the different hydrogen carriers for different size vessels. This is another way to look at it. This is some work being done by McKinsey and the Energy Transitions Commission, comparing the long-term total cost of operation and the current technology readiness level of different solutions. So we expect in the long term, the most affordable and scalable solution will be green ammonia. Here we have green methanol in a sort of comparable cost band in the long run. This is e-methanol, so this is methanol where the carbon atoms have been captured from the air using direct air capture technology. The other solutions either are more constrained based on feedstocks or likely to be more expensive. So given that there's no clear fuel pathway yet, and there are advantages to different fuels, there is a need to look at how we can get the transition started. There's one of the interesting opportunities is to look globally at opportunities for impactful and feasible green corridors where there's an opportunity to deliver relatively low cost, comparatively low cost, zero emission fuel production, targeted policy support between two countries or perhaps three countries that have a similar political and policy orientation towards this challenge, where there's the possibility to carry some of the costs in the value chain through the engagement of cargo owners, for example, and where there might be potential for spillover effects, so that if we green this corridor, it would also spill over and make zero emission shipping more likely on connected routes. So we've been doing some analysis on that, and we'll be producing a report together with our partners at the Mission Possible Partnership and McKinsey in November about green corridors and how they can enable the transition. Some other things besides the sort of macro approach of focusing on green corridors are some technological strategies. One is dual fuel capabilities in the ships, and obviously, or maybe not obviously, but this is something that's a big priority and a growing priority for those looking at zero emission vessels, because one of the risks involved in these investments relates to the availability of fuel. Having dual fuel capabilities can lower that risk. Now, this is not a silver bullet, but we think it may help encourage investment in some of the first generations. The other flexibility strategy that's been receiving an increasing amount of attention is ordering conventional ships that are zero ready or zero emission ready. This will allow those ships to potentially be retrofitted at a later date at a more reasonable cost. Here, there's a risk, of course, that zero ready just becomes a buzzword or a brand, and really our impression from speaking with the ship owners and class is that designing a zero ready ship actually requires quite meaningful targeted design interventions, and just leaving a little extra room for tanks is not enough. Otherwise, the retrofits will still be uneconomic. So it's important that the zero ready strategy becomes a meaningful one, but it could provide an option for those who are not ready to bet on a particular fuel yet today. I'll stop there and throw it back to Lee for the next panel.
Okay, thank you very much, Jesse. Very interesting presentation indeed, with a lot of insights about alternative fuels, the penetration pace, and also the clear view about the future prices of these fuels. Let's see. Okay, now we move to the next speaker, which is Christopher Donovan. He's sitting right next to me. He's a citizen from UK, but he speaks fluently Italian. And he's coming from the automotive industry, but he recently joined Cavotec, a company that is specializing on electrification, but not only. So, Chris, the floor is yours.
Thank you. I shall take the microphone because I must admit I prefer to walk around when I'm presenting. Yeah. So we've heard about hydrogen, wind. We're going to talk now about electricity and what we at Cavotec are doing to help with eliminating emissions. So firstly, I'm just going to tell you a little bit about Cavotec. I'm not going to take too much of your time with this, but it's important that perhaps that you know where we're coming from. So we are a clean tech organization. We help ports, ship operators, shipbuilders work towards their zero emission future, or back, because we did talk about sails earlier. We moor vessels automatically, and I'll come on to that later. We power the cranes in container ports. We connect ships, various kinds of ships, and I'll tell you about that as well. And we charge e-vessels. Now, e-vessels are an important part of a zero emission future. And again, I'll tell you a little bit about that as well. We're about safety, efficiency, and sustainability. So let's look at emissions, and let's consider emissions in ports. There are many drivers behind the requirement for emission reductions, and the drivers often, depending on the different kind of ships, are often different as well. So Cavotec works on cruise vessels where the demand for zero emissions in ports derives from the need to switch off engines, reduce emissions whilst the vessel is in port. Now, cruise ship operators face pressure not only from the ports, but the residents around ports. Cruise ships tend to visit ports that are built in built-up areas, and emissions cause disturbance for the residents. The Cavotec solution is flexible, as indeed all of our solutions, and we're able to adapt to the position of the hatch wherever it may be on a cruise ship. The Navy, an important client for us, particularly relevant for today. The Navy also have a requirement for emissions, but I think also there's another element to this. We talk about zero emissions, but we've not spoken about noise. Military vessels tend to be quite noisy. And again, ports are often in built-up areas. We're in a built-up area now. And it's important that the military vessels use shore power, not only for emissions reduction, but for noise reduction as well. And we have a number of successful applications in the military. Container and bulk vessels. Well, the pressure there for shore power is often about operational efficiency as well as emissions. So again, it's not just about emissions. There is always another driver. And again, Cavotec has applications all around the world, not just in Europe, in container terminals. And container terminals will probably be where there will be the most development and technological acceleration going forward. I like to describe ferries as the perfect storm, because ferries have client pressure for shore power and emissions reductions. They have the need for operational efficiency, and they have the need for minimization of disturbance. Again, ferry ports are often in built-up areas. And again, Cavotec has a fast and easy connection operating all around the globe. Already, we are ready now with emissions reduction and eliminating emissions in the ports. Talking of ports, how about a zero emission port? Well, Cavotec's working on automated mooring systems. This isn't just a safety related requirement. This is a requirement that we're going to see grow further. A significant part of the emissions emitted by a ship at the moment are in the mooring process, during the mooring process. It's about efficient and swift mooring. Cavotec is also working with electric ship manufacturers, electric vessels, and that's something that we're already seeing in Scandinavia and other parts of the world, but Scandinavia particularly is leading the way in electric ferries and vessels that operate solely on electricity. And we have a number of products that are already working in Norway, for example, all around Scandinavia and other parts of the world. Now, I mentioned earlier container vessels, and I mentioned that container ports will be part of the big driver, the technological leadership. And that's down to the fact that we are now moving towards fully automated and artificial intelligence-led operation in container handling. And that's why we will see Carvotech and emissions reduction programs and automated mooring becoming ever more important as we go forward in these electronic and automated ports. So the challenge today was to keep the time down to less than 10 minutes. I think I've just about achieved that. But I will take the opportunity to say that through the use of electric and power in the shore, power units, in the ports, in the ships, we're already doing things. And as the industry moves towards electric ferries and other automated processes, that is going to be the real challenge for the industry. And we need to lead and move quickly, because it's not just about legislation, but it's also about client pressure. And let's remember that when we're talking about clean tech and emissions reduction. Thank you very much.
Thank you very much, Chris. I really enjoyed the cases and the project that you demonstrated. Okay, let's move to the last two speakers, which will be joining us remotely. I have the pleasure to announce Simon Ring and Adam Hearn. Simon heads up Polestar and Triple Track Systems, and Adam is the CEO and co-founder of carbonchain.com. Let's see what they have to tell us.
Hi, good morning or good afternoon, everyone. From a rather gloomy London, I'm Simon Ring. Thanks for the kind invitation to be with you today. I'm kind of hoping you can see my screen. Now? Yep. Great. I can see it on in the background ahead of you. So I'm Simon Ring. I'm the head of regulatory technologies, and in the presentation today, I'm joined by our alliance partners from Carbon Chain, Adam Hearn, to talk to you a little bit about technology, some of the advances it's making in these areas, and how the collaboration between us and Carbon Chain is looking at the maritime trade and supply chains sectors in terms of sustainability. Collaboration for us is key. I'm very fortunate that we have with us today, Adam. We have other partners in terms of overall end-to-end sustainability solutions. But focusing today on the maritime trade, in my position, we work with around 1,200 shipping groups in 100 different countries that use our technologies from Polestar. We also run the data centers for many of the major flag administrations, governments, and coast guards around the world, including the US, Panama, Liberia, Marshall Islands, etc. About 60 of those. And also hundreds of mainstream financing banks, some of the biggest charterers in the commodity trading sectors, and a much wider slew of actors and players across supply chains. Some of the stats many of you are very familiar with, but obviously shipping is the backbone of global trade. And obviously sustainability has come very quickly to I think this and the supporting industries, especially the banks and the trading groups that we work with. Some of the stats here you'll be very familiar with. But I think importantly, what we found is that over the last 3-4 years, regulatory scrutiny of the industry, certainly the maritime sectors and trade sectors, has become very prolific. There's changes in regulations that surround the industry. Very frequently, I think every 7 to 12 minutes, there's a change in regulatory processes and sanctions in terms of financial services. And what we're looking to do today is to show you a little bit about how we think some of these existing technologies that are used by, as I've mentioned, many actors and players across the industry can help in terms of digitizing, automating, and streamlining programs around carbon and sustainability. Many issues that face the industry. And I'm going to touch very briefly, leaving the majority of the time for Adam to talk about the work we're doing together in relation to carbon and sustainability in the industry. But essentially, over the last 4 or 5 years, we've built up an extensive client base across various sectors. First and foremost, the program and process that people were struggling with was global sanctions, the screening of vessels, and obviously the change that we're seeing coming very quickly, certainly with the banks and the traders that we're dealing with, we're testing some of these solutions, is driving a very, I'd say, informed change. Working across all of these sectors of industry, we see sustainability coming in various formats. We're working with some of the flag administrations, We're working with some of the flag administrations at the moment in terms of tonnage tax reductions, ports, where we're working with Circle Group in terms of vessel screening for sanctions and sustainability in automated fashions. And there'll be other areas of industry that we'll be looking at these types of solutions. Our focus to date has been primarily on the financing and trading institutions in the industry. We're testing many of these solutions right now. Purple Track is the base solution in terms of how we extend to, we will be extending the functionality. And I think what we hear from many in industry is, look, these issues are complex, and we're looking for a single piece of technology that can do the things that we need it to do. So sanction screening in terms of trade and chartering is key, sustainability screening, and the monitoring for illicit activity and investigations. Purple Track itself was built primarily for as a sanctions compliance tool. But given that it's embedded in many of these institutions, we see an absolute advantage in automating and surfacing more and more information in that single service as we go forward. Very briefly, sanction screening is complex, and critically here, what we've been able to achieve is within about 10 seconds, with one single field of data, entry points, the IMO name of a vessel, to give people, certainly banks and trading groups, the confidence they need to progress with the financing and trading of transactions. So looking at ships that are listed, the companies associated with them, the countries of origin, domicile and control, and the movement history patterns are all key in terms of that part of regulation as we move forward. And I think what we can expect as we move forward now is looking at financing institutions. There's definitely a drive in the main tier 1 banks that we're working with now to look at screening vessels in terms of their carbon ratings, to start to look at sustainable financing lines in terms of interest rates. All of that comes along with the automated processes that the institutions will need. What gets monitored can get managed. And obviously that bigger drive in terms of sustainability is not just, as I mentioned previously, in the maritime sector, it's right across the supply chains. Climate risk is a big issue for most of the institutions we're dealing with. So what we're trying to achieve in this collaboration with other partners like SGS, who will be looking for verification of the methodologies that sit behind our solutions, is really getting to a point where we're able to look at transactions from one end to another. Mining, extraction, agriculture, all being part of that, intermodal transport, and the maritime piece to link in with that. And again, in relation to some of the previous speakers, working across industry with people like Carbon Chain, Vasander, and our partners at SGS, we think is critical in achieving those goals. I'm going to hand over now to Adam. I'm still driving the slides, Adam, so I'll hand over to you to speak more about the work we're doing and obviously the carbon programs that Carbon Chain are running. Adam.
Thanks, Simon. Very interesting to be part of this panel and seeing the speakers before us. I was quite, I sit on a fair few discussions like this, and to be able to see an industry that has a very clear, well understood path to net zero was quite promising, and also the very tangible energy management steps to get there. So let's hope capital meets the technology in the near future to make it happen. But onto Carbon Chain. So to give some background, I think we just need to establish what we do clearly for the audience. We are the carbon accounting platform that measures emissions along supply chains. We started in measuring commodities directly and actually what was on vessels, and so the cargoes of ships, and we expanded towards the measuring the emissions of the ships themselves as our company matured. So we're London-based. We have come out of a Silicon Valley incubator that's considered one of the best in the world, called Y Combinator, an accelerator, I should say. And we've been very fortunate to have some support from the UK government as well. And we help the carbon accounting space quantify their emissions and certify them. Some of our work that you might have seen in the media was the recent Penfield Marine carbon neutral tanker that had a transaction go on it, and also a few other very large carbon offset projects that we did the accounting for behind the scenes. So just to give some context, would you be able to go full screen for us, Simon? I think we're in editing mode there.
Yeah.
Hope sharing it. I think I'm on your other screen.
Here we go.
Thank you. So into context, the GHG emissions for shipping is roughly a gigaton per year. That's a few percentage points globally. The global commodity sector contributes 50% roughly of global greenhouse gas emissions. So that's an incredible amount. If you can solve shipping and commodities, you can basically solve climate change. It's right there in such consolidated industries. 70% of commodities traders' emissions are due to their shipping legs. We're seeing incredible uplift in ocean going cargoes. And if the shipping industry were a country, it'd be about the 6th largest polluting country. Next slide, thanks, Simon. So what does Carbon Chain do? So we do the accounting, and we also look at the end-to-end life cycle emissions. So when there was a previous presentation on well to wake, for example, we use those boundaries for many customers when we do certain calculations for them. And the key point I wanted to communicate here is that the embedded emissions can vary significantly. We do some retail accounting work as well, where we look at products, and you can have a single can of Coke and it can have the intensity of 1.6 tons of CO2 per ton of aluminium, which we see on the left here, or you can have 21 tons of CO2 per ton of aluminium, which we can see on the right. And that same distribution, there's such a huge spread. It occurs in many commodity areas and many fuel types. And getting that right is a hugely powerful message in this era where there are greenwashing accusations, and also a lot of companies still just trying to hire their first head of sustainability from a purist discipline area and get that function established in an organization. There are a lot of mistakes that can be made for those who aren't well prepared. Next slide, thanks. So what has Carbon Chain done here? We've teamed up with Polestar to actually provide vessel screening capability. So you've got a leading provider of compliance services combined with now Carbon Chain, which can give that carbon awareness to your fleet. And so now companies could screen vessels or look at spot chartering and be able to pick a vessel that is greener or aligned to certain trajectories that they're trying to hit, or certain net zero trajectories. So Carbon Chain lets you select the optimal ship and help you lower your carbon footprint. We've noticed that the benefits for some companies are that they've been able to secure cheaper financing rates by assuring their providers that they are looking at securing greener vessels in their day-to-day operations. And with accurate accounting like Carbon Chain provides, you can actually avoid any overspending on offset purchases, or the other side of that problem is you can often undercalculate your emissions and potentially be accused of greenwashing at a later date. So it's really important to get that calculation spot on. And being an automated platform like ours, you're able to make that a very efficient process to do so. Next slide, thanks. Sorry. So how do we work? A company simply enters their IMO number into our platform. So Polestar hosts our platform, and they get the complete emissions report spitting out. In the interest of time, that's all we need to summarize there. Next slide. Thanks, Simon. And what does it look like? So you put in your IMO number, you get this detailed breakdown that you see here. So is your vessel a good operator, like a green operator, or on the not so green side of that spectrum? And that'll come into a lot of decision-making processes more and more over the next months and quarters. You can see on the right, there's the purple track screening report that is well known in the industry for compliance screening. And on that, we've been able to provide a carbon rating, which is unique to that vessel. And we've been able to define peer groups that are largely accepted in industry because we've been able to look at the actual emissions of the vessels in a peer group and do bottoms-up modeling for each vessel. Next slide, thanks, Simon. So the benefits is that we can help get the assurance that there is compliance within regulations quite early on. For example, the Poseidon principles, and also looking at how to provide that into an existing reporting process. We're simple and easy to use, and you can adjust our real-time data to your own reporting standards. All right, I'll park up there. Thanks for listening to the summary of Carbon Chain, and we hope that everyone takes steps to be aware of what their carbon emissions are, because there is a lot of opportunity involved here for those who are prepared.
Okay, thank you very much. Thank you very much for the presentation. And I really agree that more and more companies are heading towards the carbon offsetting and applying ESG, which has been essentially critical nowadays in order to receive financing. And I keep a note that if shipping industry would be a country, it would be ranked at the 6th level in terms of polluting, which is a lot. Okay, this means that we finish with the presentations. I don't know how much time we have for a small Q&A. Yes or no? It's okay? So I will start with the audience. I don't know if anybody wants to ask something, the speakers. Then I will place a question started with Greg. And I will start about the Fuel EU Maritime proposal. You mentioned that there are some problems about this proposal, and I want to ask your opinion how this can be addressed.
Yes, thank you. I mean, just as I mentioned, I mean, it's a very good regulation. So on the whole, it's going to a good direction. The problems are that if you combine all the three elements, that the level of ambition is relatively low. There is this loophole allowing for greenwashing using the onshore power supply, and there is no sub-target for zero emission fuels. If you combine all those together, there is a risk that, for example, cruise ships, for which OPS is a large part, can be large part of total energy consumption, doing very little, they can basically survive until 2040 and still meet the target. So I think at least one of those problems they mentioned, either increase the level of ambition, either just close the loophole. As I mentioned, OPS is a great solution, but it should not be supported in a way that opens the possibility of using this to greenwash, and to pretend that we are reducing emissions while we are actually using coal-fired electricity to charge a ship. So either one of those would be sufficient to make the regulation from an okay one to a very good one.
Okay. And one more question that has to do with the availability of supply points for these alternative fuels that you mentioned in your presentation. Any comment about the future of this supply point?
Yeah, that is indeed a huge challenge currently. As I mentioned, I mean, it's certainly not possible today to reach those greenhouse gas emission targets using alternative fuels. And the problem is not only cost, but it's just not possible to supply the amount that is needed, and the infrastructure to bunker those fuels is also not present. And there is a huge work to be done in order to change that. On one hand, the Alternative Fuel Infrastructure Development Directive is a bit of a missed opportunity because it does not set any clear targets for having those alternative fuels bunkering infrastructure in ports. So this is a bit of a missed opportunity. But when you look at ammonia, for example, there is I mean, already it's a hugely traded commodity. There are millions of tons of it being traded and shipped worldwide. There are more than 200 ports already worldwide that have ammonia infrastructure inside ports because it is already shipped. So it's not that we are starting from scratch, but indeed, I mean, huge work is still ahead of us. I mean, there's no doubt about it, especially when we talk about liquefied hydrogen. For example, in Europe, we are just having a couple of liquefaction plants with 5 tons per day of liquefaction capacity, which is not enough for a single ship. So clearly, we need to up our game in this regard.
Okay, coming now to Greece. Do you see regional variation in the adaptation of these new technologies that you talked about?
That's an interesting question, given the audience I've got here today. Yes. As I mentioned in my presentation, we're seeing, if you look at the e-ferries and specifically electrification of ferries moving under their own power in the sea or across a fjord or a lake, we see Scandinavia is very much at the front there. If you look at operations, honestly, the Middle East is very good, really accelerating, particularly Dubai, and also Holland and the Benelux area. For me, I think the thing that changes lives immediately is probably cruise and cruise vessels in port. And there we're seeing Southern Europe, Malta, Italy really very much on the push there. So yeah, we do see regional variations. Depends very much on the segment, but I would say on vessel, Scandinavia, in port, container, Middle East probably, and shore power very much the Mediterranean basin.
Okay, thank you very much. I don't know if we have the possibility to ask the speakers that are remote with us, if this is the case, but I think not right now. Anyway, I think this is technically feasible. Okay, one question for Simon and Adam. How they see in their own way the future maritime regulations, what is to expect, where will be the focus in the next years. Gentlemen?
I'll go first, Adam. Yeah, I think specifically when I was speaking earlier, you know, the reality around financing is vital. You know, if you look at asset-based or trade-based financing, what we're seeing start to emerge in major banks in these sectors is a leading requirement to start now looking at what they're financing, where it's come from, and the shipping and maritime piece of that is super important. So in relation to the testing that we've undertaken, screening vessels, which are not part of or become part of the financing of the transaction itself, is voluntary. But many of the banks are adopting the screening solutions that Adam showed you to start to steer clients towards greener vessels. Sustainability in terms of the actual financing of transactions is a bit further down the road. But I do think that banks are, from shareholders, investors, starting to really drive that change. And obviously finance is key to every part of the industry that within maritime and the trade sectors. So it's something that we're seeing happening pretty quickly, you know, and has surprised everybody how quickly that has started to happen. There are very few mainstream commodity financing banks that don't have a sustainability program of sorts in place now. They're starting to work on. So, Adam.
Thanks, Simon. Yep, couldn't agree more to that banking point. we know that they're putting in place sustainability programs and screening programs because we're literally helping them do that. And they're very much escalating their level of leadership commitment and also the financial commitment to do this. So I think what we'll see is more mandatory disclosures required. We're seeing climate stress tests roll out in banks and government-led policy currently, and in the next year or two, that's intensifying. We're seeing more disclosures forced for those companies, and also customers and stakeholders requesting disclosures. We're going to see the EU ETS or emissions trading system include shipping emissions at a point in future, and then we're going to see that migrated out to a larger carbon border adjustment mechanism. So when a ship comes in, not only is it mooring, but it's doing paperwork for what its embedded carbon emissions are. And that's quite a retooling of the economy. And I think history tells us that whenever you have a significant kind of global event like world wars or COVID, there's a very large social alignment that comes out of this in order to retool an economy. And history tells us that there's opportunity there, there's money to be made. And I think we're starting to see that COVID is going to be replaced by the climate crisis very soon. And carbon emission reports are going to become the new passports for trade. So it's very imperative that people and their leadership teams get behind this, because you can see what's happened to other companies that haven't embraced the new digital wave, whether it's Kodak cameras thinking that there wouldn't be digital cameras in future and they're gone now, or if it's Nokia thinking that there wouldn't be smartphones in future and that was a solution, or they're almost non-existent now. And to not be carbon aware in the way you're doing business is going to be an extreme oversight.
I just add to that the other thing that we do here regularly is that all of the efforts and owners and operators will undertake, whether it's fuel speeds, a lot of the great speakers that talked about the innovation changes in fuels, if they're not monitored on a real-time kind of intraday granular basis, where are the rewards for people doing the right things? So that kind of ability to monitor and incorporate all of that information and data into the carbon reporting, we think is really important too.
Okay, thank you very much. I think we have one question from the audience. But I think that you have to take the microphone so that also the speakers will hear you. So first, please identify yourself and then please set the question.
Hello. Sorry. I'm David Blenkinsop from Green Sea Guard, retired international banker. Question, how do you measure your ship emissions? It's not such an easy task, as we've seen people suggesting drones which give up a one-off measurement if you're lucky that the weather's not too rough. Thank you.
I'll take that one. So we've had to be very primary evidence driven. So we need ground truth data. So when we did the carbon neutral certified cargo for Penfield Marine, for example, we had to go down to daily bunker logs and look at the consumption on a daily basis. And then in our own systems, we have a certain J-curve that we have created for each vessel. And that's the most accurate way that we've found to do it, and also allows you to have the independent verification and gives you the integrity behind your numbers, so that if there is any offsets purchased or other declarations that need to be made publicly, you can always go down to the engineering backed information.
Could I make a comment on that?
One more question, yes.
No, I'm Katrine from Boat Antwerp, and I have a question for Mr. Pavlek from Hydrogen Europe. I was triggered by the fact you said you regretted there were no infrastructure targets in the AFIDs, knowing that in AFIR there is no fuel choice, carbon intensity, and that the AFID is a short revision period. I was wondering what kind of infrastructure development obligations you would have liked to see in the regulation.
Yes, thank you. I mean, indeed, it's true that the revision is now ongoing, so it's clearly an opportunity to push for some target. I'm not saying there should be a clear mandate for example, to have an ammonia bunkering infrastructure in every port. That clearly is too soon for that. But I think the regulation should at least set a clear, let's say, framework or and set a few kind of clear path that by 2030 or by 2040, LNG, for example, is no longer going to be a viable solution. I mean, at some point in time, we will have to do a fuel switch from LNG. It's a good solution for now, but it's not a good solution for 2050. If you want to have a fully decarbonized shipping sector, we have at some point start to think about zero emission fuels, and it can be either ammonia, it can be methanol. For now, it's certainly too soon to set a target because the market doesn't know what the future fuel will be. So whether it will be ammonia, whether it will be methanol, whether it will be something else. So it's clearly not ready to set a target because we don't want to end up with stranded assets. Similarly to what has happened with LNG, which has been promoted for some time by the European Commission. So we don't want to repeat the same mistake. But clearly, the European Commission should set a vision that by some time in the future, this requirement will be there, so that people don't end up investing in something that will, at some point in time, not be viable anymore and will end up being a stranded asset like LNG, for example.
One more question.
Sorry to come back on your answer, just to clarify. I believe you're saying you use the IMO's suggested solution of fuel in, fuel out times their logarithm to measure emissions, and that you do not actually measure real-time ship emissions from the ships. I'm not trying to be rude here, I'm just trying to clarify.
Yep, that's correct. We have the emission factor multiplied by the amount of fuel burnt. So it doesn't take into consideration black carbon, for example.
Yeah, could I make a comment on this point? Penny authors? Yeah, okay. Yeah, there's also this issue around zero emissions or emissions from the ships. We also need to be very, very careful on the life cycle analysis of all of the fuels that we're talking about here. The criteria that's being used by the IPCC is on a 100-year global warming potential for methane, for example, whereas we're looking at tipping points within the environment at 20 years. And if we then translate that into carbon equivalency, then methane rises up to about 86 times the impact of CO2 as opposed to 23 times. And that's a very, very significant change in that approach. There's also one other pretty big elephant in the room in general, and that's the amount of renewable energy that we're actually going to need to deliver the fuels into the market. The 8 e-methanol ships that have been announced by Maersk coming into the fleet in 2024, those would actually use the equivalency of the entire Danish renewable energy production level of today to fuel those 8 ships. So we're looking at a massive ramp up of renewable energy, and shipping is now plugging into a far more refined global fuel market that we're not used to. We're used to residual fuel markets where we're the primary customer. We are not going to be the primary customer anymore for a lot of these fuels. So I think that there's a real shakeout that's going to be happening in the costs involved, the level of where we are in the pecking order, and also the fuel selections that we're going to have. And they may not be the ones that we wish for. Thank you.
Okay. Thank you very much for these statements at the end. I think we can call it a day and stop it. I have to say that I am optimistic despite the variety of solutions on the technical level on the fuels. I can say that we have to be optimistic that because if all the stakeholders work on a collective way, similar to the approach that we have for the COVID-19, then we can deliver the same, let's say, miracle and do what we have to do for the climate change. So thank you very much, everybody. Hope to see you later.
Thank you. Thank you so much for attending. The afternoon session will start at 2:30. Thank you. Enjoy your lunch.